Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carrillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carrillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carrillo. Today we have Darin Batchelder, and Darin is a loan portfolio specialist who has invested passively in 14 syndications and has recently gone to the more active side of syndications with some different roles. And we're going to go through those here on the show. So thank you so much for being on the show, Darin.
Absolutely. Thanks for having me, Charles. Looking forward to it.
Yeah, great. So what was your professional background prior to starting your current business and investing in real estate?
So I kind of hopped around a few different career paths. I started out out of college. I started out as a CPA with Price Waterhouse and then moved on to PepsiCo within their audit division, both domestic and international. And then I transitioned into software sales, selling larger ERP software applications to Fortune 1000 companies. From there, I transitioned into mortgage capital markets trading desk, so more institutional selling, and that was working for a large bank called ABN AMRO. They're a Dutch bank. At the time, they were a top 20 worldwide bank, and we were reselling the bank's origination at both full doc, jumbo residential, as well as multifamily loans as well, and it was bank to bank type deals. From there, I went and started my own business doing the same thing in 2007. I still have that business, but I wanted to get into the real estate side. And about 2 years ago, I started to look into getting into real estate and both on the passive and on the active side.
Interesting. So why did you choose real estate as your investment vehicle?
You know, I think for a number of different reasons, but one of them was I fell into the camp of, get a good job, make good money, put it aside, put it into the stock market, and it is just going to grow, right? That's what we're all sold, and just build up the big nest egg. And it did grow over time, and I've done well financially, but it just didn't grow to the point that I had expected. I just turned 50 last year, so. It had plenty of years to compound. And when I started to look into real estate and educate myself on that side, it just seemed like a much better way to grow your wealth.
Yeah, you're getting not only the passive income and the income that you can build upon, but you're also getting the wealth, but you're also getting the time freedom, and it's a lot faster. There's more income streams with real estate versus others, typically with equities and securities. So,
right, and you're getting leverage, leverage in a number of different areas, and it's a very tax efficient way to invest as well. So those are all learning points that I've learned since getting involved, and I'm happy that I'm doing it now. That's for sure.
So before we get into your real estate investing, I want to just learn a little bit more about what your company TZK Capital does. And I was looking at it that you're dealing with buyers and sellers of portfolios. Can you explain a little bit more? I know you touched on it previously.
Sure. So when I was at ABN AMRO, and this is dating back to 2002 to 2006, they were a top 5 residential jumbo originator, and they didn't want to keep the loans on their books, so rather than sell it to Wall Street to put it in securities, I was part of a trading desk that would call on other banks to sell the loans direct to other banks. And we were doing that for both residential and multifamily loans. When TZK Capital, I formed to do basically the same thing, but I didn't have the loans, so I had to find both sides. So what we do is we work with large banks as well as regional banks and community banks, and we work with banks that are looking to sell loans, and then we find buyers of loans. But we're dealing only with bank-to-bank transactions and focus on residential loans, multifamily loans, and commercial real estate loans.
So you're dealing with buyers and sellers on both sides of the loans. What do you see over the next? I mean, we're deep in COVID right now, in mid 2020. What do you see for the next 6 to 12 months of real estate lending? Let's just say for commercial real estate lending and multifamily.
Yeah, I mean, you have different cycles, in the economy, and COVID has definitely impacted the economy in a negative way. And everybody kind of knew that the economic cycle was due to end at some point, and we just didn't know what was going to cause it. And now we're in the middle of the crisis. Well, what happens when you're in a downturn is you're going to have, loans that will go bad, right? And you'll have banks, the banking industry is in a much better place today than they were back in the 2008 crisis. Back then, the situation was a lot of banks didn't have a lot of capital. And so when I started my business, it was all about large banks wanting to deleverage their balance sheet and sell loans to raise cash. And our business focused on clean credit quality performing loans, where a lot of private equity firms were looking to bid 30-40 cents on the dollar. We were going to these large financial institutions and saying, look, we have relationships with banks that want to buy strong assets, and we can sell loans for you without you taking a loss, but you're going to have to sell your better loans. So that was the business. And then after a number of years go by, banks get recapitalized and they're in a better position. They don't have the need to sell their better loans. So to answer your question, I think that, as time goes on, you're going to have more and more loans that are going to, be in trouble, and banks are going to have to decide whether to foreclose on those assets. And then, what they do with them. Banks typically don't want to manage those assets. So they're going to want to turn around and sell those, either as troubled loans, or they're going to look to foreclose and then sell the asset.
Okay. Interesting. Yeah. It's going to be, I've seen it now with looking at smaller mortgages, like around a $900 million right now for commercial multifamily. And it used to be the 25%. And now you're starting to hear brokers saying now it's 30% down. It's 35% down. It's just I think everybody's getting a little bit more conservative. I know with the agency debt, Fannie and Freddie, they're now going much longer on the reserves that are required, which we didn't see even last year or a few months ago. So,
right. That's the biggest talk that I hear in the multifamily industry is because the agencies, Fannie and Freddie, are such a big part of multifamily lending. And, pretty much immediately once COVID happened, they changed their requirements, and it really was like almost no reserves for, and they were just they were determining what the LTV was based on the cash flow of the property. But now they're requiring anywhere from 12 to 18 months reserves, which makes a deal very difficult to give investors the returns, the forecasted returns that everybody's looking for. So the talk that I'm hearing is that, the opportunities most likely will come in the area of loan assumptions. And loan assumptions, you're not going to have those same reserve requirements. It's going to come in the name of other properties that were done with bridge loans. And from what I'm hearing, a lot of the bridge lenders are not renewing, those commitments. So if it was a 3-year +1+1, when they get to the end of the 3 years, if they're coming into that time frame now, a lot of those bridge lenders are not extending for that 1 year. And so that's putting them in a little bit of a bind. So those are the types of opportunities that we see potentially coming down the path in the next 6 to 12 months.
Yeah. No, I definitely agree with that. Everything is just tightening up. We've been pushing some of the sellers that we've go straight to on the smaller multifamily side we've been talking owner financing with them, because the assumption works well, but it's very it's pretty difficult to get approved for the assumption on one of those agency debts. I mean, it might even be harder than going and get one yourself. You know what I mean? With the amount of documentation that they require you to, you know what
Yeah,
I mean?
I think it depends on what part of the market you're focused on. I mean, if you're focused on smaller multifamily, 4-unit, 8-unit, 12-unit, then it's a different, mindset and a different, loan set. But I'm more focused on larger multifamily. So the group that, I'm associated with, and a lot of the syndicators that I associate with are focused on, 60 unit and greater. A lot of them are 100, 200 unit plus. Well, in that world, agency debt is still, predominantly the financing of choice. And if, the agencies can get comfortable with the new buying group, and the new buying group is as strong or stronger than the existing, buying group, then why would they not want to, transfer that? Now, a new guy buying large scale multifamily, in my experience, you're just not going to win the deal. You have to partner with experienced guys. So, if you want to get into that larger unit property, then you go build relationships with other partners that already have experience there.
Yeah, for sure. It's we were talking about agency on property that we had under LOI, 130 units, and just the reserve requirements are now 12 months plus, and it's just, you really have to figure out exactly, kind of go back and sharpen the pencil a little bit through your numbers to see exactly how you can close on it. But
very difficult right now to do new debt. That's why I mentioned assumption. So if that property had agency debt on it already, and you can assume that loan, and you have a strong buying group, I don't see why that you can't pursue it from there. But I don't know the particulars of your deal.
Yeah, no, it was just, not to get too specific, but it was just something that was, they do have agency debt on it now. The thing, though, is that with one of the brokers that we usually go through, loan brokers, they were telling us, they were going through the process with us, and he was explaining to us a little bit more difficult, which I've heard from other brokers, but we have a pretty solid buying group, so I don't think it'd be any problem. But we're going back. The main thing is the reserves. It's not really going back and that thing. It's, making sure the reserves work, because now that you're raising another few months, right? I mean, that really really constricts the returns to the investor. So you just have to make sure, got to go back and, so.
Completely agree.
So you're a passive investor in 14 syndications, 4,000 units. How did you get started in passive investing? Were you working full time while you're doing that? Was it just another way of just supplementing income, or was it a way of getting you into the whole active role now that you guys are playing?
So in the fourth quarter, 2017 is when I decided that I wanted to get involved with real estate. I didn't want to do single family fix and flips. I wanted to do larger deals. So I went searching out for a way to do that. And I joined a multifamily mentorship group based here in Dallas, Brad Sumrock group. That's where I met a lot of other syndicators. That's where I met my partner on my first sponsorship deal, Raj Gupta out of Chicago. And he's got a ton of experience, and I wouldn't have, I'm convinced I would not have won that deal had I not partnered with somebody, that had the caliber of and experience of somebody like Raj. So I joined that group at the end of 2017. Beginning of 2018, I started to invest passively. Okay. I invested in 7 different deals. Some of those deals were property deals. That's probably where you get the 14 properties. And then I had one sponsorship deal. It took me a year to land my first deal as an active lead sponsor. And then since then, I've been out chasing new deals, runner up on 3 deals in the last year. It's very competitive. And then I partnered with two other very well-established gentlemen that I know here in the Dallas area for a very, very, very small minority stake in the deal on like a 200 plus unit deal. So, the whole thing is just getting yourself out there, building relationships, building relationships with other syndicators, building relationships with investors, building relationships with brokers and with finance companies. And that's kind of the name of the game.
So what do you look for in an operator when you're investing passively?
So I look for people that have a track record. The 7 deals that I invested in, the reason for my investments may be different from other people. Each person has to determine what's important to them, right? Some people, the most important thing is, look, I want a deal that has, really, really, really strong cash flow, or I want a great location, or I want it to be in my backyard. Those could all be factors. For me, I knew I wanted to go the active route. So there were I was trying to, one, pull money out of the stock market because I felt like multifamily passive investing was a stronger investment play than being in the stock market. And then secondly, I wanted to learn. Okay. So, and I wanted to build my resume for the active side. So, it's kind of funny. In this world, it's a little silly that people talk in terms of how many units do you own, right? And everybody kind of uses that as a braggadocious thing. So I saw that, very early on. I think it's kind of dumb because you could invest 50,000 into a, 50 unit deal or 80 unit deal, or you could invest 50,000 into a 300 unit deal, right? It's still $50,000 investment. But I saw how it was played. So part of my investments were I was seeking out large unit deals so that it bolstered my resume. But I wanted to do it with operators that had a strong reputation. So I talked to other syndicators and I talked to other passive investors I met and asked them where they've had success. And so then I kind of reached out to those syndicators, got on their investor database, and then as they landed new deals, they would email out to their investor database, and I was now included. So then I started to invest from that perspective.
So when in those passive investments, I always like to ask anybody that's been a limited partner before what they liked, and then what they would have liked to see. So one thing I hear most is communication.
Yeah, I think communication and transparency is what most passive investors are looking for, and performance. Some people, may not be happy with the communication, but if they're getting 10%, dividends annually, then they're like, I'm okay with it, right? So, or if they had put money into a deal and then within 3 years they doubled their money, they're like, you know what, the communication wasn't the best, but he made me money. So most people will talk about they want good communication, they want transparency, they want to know the good, the bad, and the ugly of what's going on at the property. But I think when the rubber hits the road, people will also trade for performance, so those two factors. But I remember my first passive deal, and I had the capacity, like I did 7 deals. I had the capacity to do, multiple deals, but I remember it would, it's still scary doing that first investment, actually wiring the money, signing the documents, and then wiring the money for the first time. And I remember I wired the money and I kind of expected to get a immediate response from the sponsor. Hey, Darin, man, we got your funds. You're good. Thank you. And it was like silence, right? So like after like an hour, I email and I hear nothing, right? Then I send a text and I hear nothing. I'm like, holy cow, what's going on? So then I call and then they send me back a message saying, hey, here's the deal. Our bank, I can see all the deposits come into my bank, but I can't see who it's from until the next morning. So, tomorrow morning I'll confirm, your receipt. So I'm like, okay, well, at least I know the process. And then the next morning, sure enough, they responded back, hey, we got your funds, we confirmed it. And then, I had comfort, right? But I think where the sponsor could have done better, and what I did with my investment group because of my experience, is when I received the paperwork and told them, here's how to wire the funds, I gave them that expectation. Hey, when you send the money, I am not going to be able to see and confirm to you until tomorrow, because I think that's important. Especially that first time, when you don't know and you're kind of doing something for the first time, it's scary.
Yeah, especially with there's so much. I was just watching a YouTube video on it from different title companies, and they're saying the amount of fraud that is prevalent in
Right.
with closing, with the wire transfers, with everything. So it's something where you get that wire transfer, and you're like, I have no idea who it's from, but we received it. This is the right account, because you usually get it within an hour. But
Right.
it's also they're closing a lot of people, so they have 50 or 100,000, which is the normal number or whatever, coming in multiple times because they're telling everybody, hey, you got to wire in now. We're closing whenever, and I
Well, I
wired over,
use
and then
the
like 2
same.
days later, I heard,
Yeah, I use the same bank as for our syndication, and I found that the process was exactly that. I would see the deposits hit, but I wouldn't see the detail until the next morning. So it was exactly what the sponsor, the first sponsor had told me. But just communication is extremely important.
Yeah, it's also the amount of communication too. So for some of the passive investments I've done is that you get like a one-page type email or report, and you can read it in a few minutes. You know exactly what's going on. It's got the bullet points on it. Takes you, you're done with it in a few minutes. You know what's going on, and if you have questions, you can always reach out to them. But if everything's within line of what you understood, it's a pretty simple update. And just knowing that, hey, we're collecting rent, and this is what it is, and expenses are $100 more and rent's $200 more and than we
Right.
expected. And,
I think everybody has different expectations.
Mm-hmm.
From my standpoint, I actually like to read the commentary in the email, and I really don't want to. They send me the financial reports, right? They send me the P&L and the balance sheet, and I'm looking at that very closely on the deal that I'm the lead sponsor on. But when I'm a passive, I really don't want to spend a ton of time clicking on reports and analyzing them. So that's where, for me, I appreciate the transparency and the commentary that comes in the email, rather than just, hey, property's doing great, here are the reports, truck on. Well, I don't really feel like opening the reports and analyzing them, right? But again, at the end of the day, I may have one of those investments, and if the performance is great, I'll probably be like, okay, maybe the monthly updates aren't the best, but they made me money.
Yeah, no, for sure. Yeah. Every syndicator, every operator has a different way of how they handle investors. And obviously they're attracting investors that will be reinvesting with them that like that, depending on what their profession is and their, how detailed they like to be with it. But so you've kind of gone to a more active role. Can you describe the couple deals? You said you had a minority share in. I take it these are all in Texas. Is that correct?
Yes, both of the in Texas. The one that I was a lead sponsor on. So, I started investing passively. At the same time, I started to, work towards becoming an active investor. And there's a lot of steps that are involved, and each step is a little scary at first, and then you get used to that step, and you have to move on to the next one. And it took, from joining the multifamily group, kind of December 2017, we were awarded the first sponsorship deal in September 2018. So it took us about 9 months, and I had bid on a number of transactions before that, and was not awarded the deal. But 9 months to land the deal, and then we closed that deal in December. So a few months to raise the money and close the deal. And it's funny, I remember the first deal that I put an offer in, and I came home and my wife was like, what's going on? I'm like, just put the offer in. And it was I think it was a 64 unit in Denton. And she's like, you excited? I'm like, I'm scared shitless. She's like, what? You've been working so hard. Why? Why? I'm like, what if they accept it? Like the first offer going out, I still wasn't completely 100% confident whether, the underwriting we were doing was appropriate or not. And then I got outbid by like 300,000-400,000 by, two people. And I said, okay, we're not far off in terms of, we're not overpaying. That's the point that I didn't want to have happen, was I didn't want to overpay. So each step is a learning process, and you kind of have to have faith and determination and perseverance. And but I love the business. I love the business because, you brought up early on TZK Capital. That business I formed, and all the profits come to, the company that's owned by myself and my wife. So it comes to my family, right? But the syndication business is completely different. So the 76 unit deal that we closed on at the end of 2018, that was a $6 million purchase. And it was myself and my business partner, Raj Gupta. And then we had 44 limited partners. So what's exciting to me is, for the last year and a half, we're growing the net operating income of the property, and the property's doing phenomenal. We're, way above our rent projections. And, but what's exciting is that, when we sell that deal for a profit, we're not just making money for myself and Raj. Like, we're helping grow the wealth of 44 other limited partners. And before getting involved in this multifamily group, I had no idea that you can do this. So now I'm completely charged up about the future and just getting the word out and letting more people know that they can get involved in these large, real estate transactions. And that word syndication can be kind of a scary word to a lot of people, but it's just people pooling their money to buy a larger asset. And so, I want to get the word out and let more people know. I wish somebody had introduced me to this way back when, even when, maybe I wasn't going to take an active role, but I was making good money and I didn't want to put it all into the stock market, but didn't know what else to do with it.
Yeah, no, I totally agree. I wish I'd got involved in syndications more earlier on in my multifamily investing career, because people would ask me, they see what you're doing, just friends and family, and hey, how can I get invited? How can I do it? And you kind of, you're thinking to yourself, well, I don't want to steer them the wrong way. Like, this is not when you're actively involved in a property, it's not a passive role, even though
Right.
the income comes in passively. There's a lot of management, whether asset management with the property manager, dealing with all that stuff, getting calls for larger repairs and stuff like this, and the weekly call with your property management company. And I'm like, oh, it's it's buying a business, you know what I mean? And I think you
Right.
steer a lot of people in the wrong direction, saying, hey, you probably don't want to do this. I mean, it's just, and I didn't have the way of doing it with bringing them in as a limited partner and stuff like this, which just makes it so much more powerful, because now you can offer it to busy people or people that actually want to receive passive income, which is really truly the only way in real estate to receive passive income. I mean, there's not actively owning a place will never be 100% passive, so.
Right. But you can scale, which is because in these large multifamily deals, there's so much leverage. Okay. And leverage can be, a scary thing. But it also can really boost returns. And also, so you're leveraging, the lender is putting up, 70, 75, they were doing 80%. I don't think they're going to be doing that probably in the near term. But you're also, if you have full-time property management, on site, our property, we have a full-time leasing manager and a full-time maintenance person, then you're leveraging a third-party property management company too. So yes, there's still a lot involved, with getting the deal done, with raising the capital, day-to-day management, but it frees up a lot of your time where you can go after the next deal and you could really scale, versus if you were buying a 12 unit deal and you're managing it yourself, it's very difficult to scale because it just sucks up all your time.
Yeah, no, for sure. And then you're getting called on every small thing. If you have the system in place, like you're saying, for scaling, and you have the on-site people, that just makes it, because they're taking so much off your plate. They're going to handle all the marketing.
Correct.
They're going to handle all the leasing. You're not paying a ton of money for every new lease. Since you have someone, you might just pay them a bonus of, $50 or $75 per new lease. So it's very, the scales of economy, it's very efficient when running it at that point. But it's also, once you get it running, it's fine. It's just, finding the deal. And that's why having the partners, like you were saying, is someone finds money mainly, someone finding deals, because just either one of those is a full-time job.
Yeah. So I was on another podcast recently, and somebody was talking about going from passive to active, and they used the word like easy. And I could tell that you are not of that camp. And I was like, I would not call it easy. It's definitely not easy, but it's exciting. And the real estate world is completely, I mentioned that I kind of jumped around to a few different industries. But the real estate industry is the first industry I've been a part of where there's so much sharing of information, and there's so many people that want to help the next guy. I had so many people help me get my first deal, and I can't tell you how many calls I'm on with people that reach out to me on Instagram that, I'm trying to help and give guidance to the next guy. And it's just very open. And I love that. There's a very big abundance mindset with real estate investors.
Yes. And I think everybody that's successful in this level of real estate investing, when you start syndicating properties, not really the mom and pop stuff, they know that it has to be a team sport. There's no way you're going to hit the next level without working with other people, without, sharing it, having the abundance mindset. And that's why it's great being part of different groups, like you're part of a mentor group, being part of a mastermind group, stuff like this, and sharing those ideas and sharing your experiences. So you're talking about, what about for your first deal? You're talking about that. Like, so for the first couple of deals, in your experience, what were some of the issues you had? There's probably a ton of them, but just pick a couple that you think, and how'd you overcome them?
So to win the deal or after the deal is closed?
Either on. Closing the deal, obviously that's when you get it accepted, that's when it really starts. The LOI gets accepted. But
I guess a few things. One is, leading up to and winning the first deal, there's a lot of different steps, and each step could be scary. And learning how to push past the fear is something that I'm a big proponent of. There's a lot of people that just let fear stop them, and or just want to, education is good, reading books on multifamily and listen to podcasts and talking with other people. But at some point you have to actually make the decision to do it. And when, the first time you do it, you're not going to be perfect at it. Right. So, calling brokers, right? Well, hey, Mr. Broker, this is Darin. I'd like to do a property tour on this 100-unit deal. Well, what do you own? Well, I don't own anything, but I really think that I'm a good fit for this. Right. So, you kind of stumble through the first few on how you, let that broker know that even though you don't have a deal, that, hey, I'm part of this mentorship group and I'm partnering with other experienced people. And, we already have indications from a lot of passive investors that they have interest. So raising the capital, it doesn't appear to be an issue. And, all those. So that's one scary part. Then the other, underwriting deals, right? Well, okay, how do you underwrite a deal? And at first you're not that good at it. And the more deals you underwrite, the more comfortable you get. I mentioned that I was scared, that first time putting in the letter of intent. Well, The next deal, that was like a $4 million deal. The next deal I put an offer in on was double the size. It was an $8 million deal, but I had done so much underwriting that I was like, holy cow, this is a great deal. And I just came in at like full listing price, but they already had locked in a buyer. I tried to get them to move our way, but it didn't happen. But I jumped on it very quick because I had looked at so many other deals where the numbers didn't work, so you get comfortable with that. And then, when you finally get the deal, you have all these people that say that they're interested in investing with you, but you don't really know are they going to invest or not, So you put the deal under contract and then you present the deal out to investors, and it's kind of a leap of faith, that, you've got the deal and the money will come. Well, at first, like the first week, we raised like 65%. I was like, oh yeah, this is pretty easy. That last 35%, took some hard work, like calling people, following up, but we got the deal done. And now a lot of the investors that are in the deal are, they're very thankful that they're part of the deal. They, they like the transparency and the communication, and I hope to work with them on future deals going forward.
Yeah, I know what you mean by that. We had a $2 million raise on a syndication we did last year. And the beginning started off and you had investors that were waiting to invest. And then, like you said, and then you have the final part of it and you're like, all right, well, we gotta, and we're, you're having the, I think it was like every night or every other night, we're having calls to the GPs. Like, what are we doing? Like, how are we going to raise this? What else do you have? Like,
right.
How can we do this? Like, you know what I mean? But you got to get it done. But then the confidence always comes when you're putting the offer in. So you knew you had the confidence already because you had already underwritten in there. So like, I know for that property, we got a great deal on that. I would go back now if that same deal came to us. I would pay 5-6% more or whatever for that property because I knew like we had gotten a great price on it. And you'd be very confident going in because you know exactly what the market is. You know exactly everything around it. You probably know that property so intimately after, underwriting it and then after owning ones too in that area. And then you're like, oh, I know everything. I buy it for not, 80,000. Anything under is great. Anything over, has to be this and that.
Excellent point. When we put together the business plan, I had rent projections that were obviously higher than the existing rent because we were going to improve the property both on the exterior and the interior. And we developed those rent projections based on looking at other properties in the area. But there's still no guarantee, right? When you go to execute. So I was confident, but I also was like, okay, I haven't done this before. And until I see it happen, I don't know if it's actually going to come to fruition. And thankfully, we surpassed our rent projections. So it turned out, in our favor, in our investors' favor.
So Darin, what do you think some of the factors are that you and your team have implemented in your life and business that have led to your success?
I'm a big proponent of pushing past the fear and taking action. I like to learn. I like to learn and educate myself. But I believe that I think there's a lot of people that they will just keep in that learning phase and won't take action. And from most of the books I read and different things I see on successful people, whether it's running a Fortune 500 company or whether it's being a big time real estate investor or starting up a tech company, whatever, they have to make decisions without all the data. Yeah. They try to accumulate as much data as they can, and maybe they have 40% data, 60% data, 70% data. But then they have to make a decision based on that. And I think a lot of people get hung up on trying to be 100% certain. And I don't think that that's out there.
It's analysis paralysis.
Correct.
Yeah. No, I see that all the time with people. And it's just kind of like, you got to do the first one. You got to put it out there and you got to be consistent too when you're doing it. And, put out those LOIs, start meeting those people. go to one meetup. I mean, now it's a little different, but before, go out to one meetup a week or go out to one a month or go to a conference.
That even
here.
is a scary step, right?
Oh,
The first time of going to a meetup, you don't know anybody, and you don't know that much about real estate, and like, okay, are they going to judge you because you don't know? And then you get there and you realize, look, they just want to help you and just, be real and build relationships, and they want to help you from start. So yeah.
Awesome. Well, how can our listeners learn more about you and your company?
Best way to reach me probably is through social media, is Instagram. I'm on Instagram at Batchelder Darin. You could private message me there, or you can email me at dbatchelder@tzkproperties.com. I'm also on Facebook and LinkedIn.
Okay, awesome. Well, I'll put all those links into the show notes and for the podcast and for this YouTube. So thank you so much for being on the show today.
Absolutely, Charles. I loved it, and have a great week.
Thank you. You too.
All right, take care.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Harborside Partners Incorporated exclusively.